Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, July 14th. Happy Friday to you guys. I hope you guys got some great upcoming plans here, especially in the middle of summer here. We got a lot of data to go over today, so we're just going to dig right into it. We'll start off with the Consumer Price Index for the month of June. So back in May, it dropped 0.1%. Forecast for June was supposed to go up 1%. And it basically remained unchanged. So this number went from year over year 1.9% down to 1.6%. So consumer price index dropped a bit. Now when you strip out the food and energy, you get what they call the core CPI for the core CPI. So back in May it went up 0.1%, and the forecast for June was supposed to go up 2.2%, and it went up only 0.1%. So the year over year for the core CPI is 1.7%. Now, of course, the Fed likes this at 2%. This is an important one because the Fed looks more at the PCE, but they also, of course, will look at the CPI as well. But the favorite gauge for inflation news is the PCE. But this also is important because it lets us know on another gauge of inflation from the CPI on the consumer level. And that's really what we kind of look at in terms of when we look at these inflationary numbers. We also got retail sales today for the month of June. So back in May, retail sales dropped 0.1%. Forecast is supposed to show it going up 0.1%, and it dropped 0.2%. So of course, this is getting a little alarming because this is like 2 months in a row that we've seen retail sales drop. Now, when you strip out the big ticket items of autos here, we have back in May, 0.3% drop, and forecast supposed to go up 0.2%, and it dropped again another 0.2%. So again, kind of disappointing here where things are moving in this range here. Industrial production, however, we're seeing some positive notes. We see back in January, 0.1% increase. Forecast for June was supposed to go up 0.3%, and it exceeded that at 0.4%. So industrial production a little bit better, gives us a little bit better news there. Capacity utilization showing a little bit of improvement. We were at 76.4% in May. Forecast has it going up to 76.8%, and basically split the difference at 76.6%. So capacity utilization went up a little bit. We also got consumer sentiment in July. So this month we usually get about 2 readings of this. So the early sentiment is showing at 95.1 back in June. Forecast for July is supposed to be in the same range at 95, and it dipped down to 93.1. This might help kind of explain the lower retail sales, where things are at. I mean, there's a lot of different things that we're kind of seeing that's going on here. So we'll kind of touch base on it after we kind of cover this business inventory. So we see a back business inventories for the month of May. So April it dropped 0.2%, but May increased 0.3%. So they're getting ready for the summer here. Getting ready for the third quarter here, going into the end of the quarter here at 0.3%. So we're seeing businesses stocking up for the summer, which is a good thing as well. But overall, economic data not as good because we really kind of look at the CPI, we look at the retail sales. CPI is basically showing that it's tame, especially on the heels of the Fed raising interest rates. They do that to keep inflation in check. But inflation right now is just not something that's showing us any threat right now. And if anything, like the core PCE, what we've been seeing, it's been dropping, and that could lead to deflation. So that raises concerns. And of course, retail, as we've been reading, it's been taking a bit of a beating as well. And consumer sentiment kind of helps support that in the sense that if people aren't feeling as well about things, they could be, they're not going to be out there spending money. They're going to be kind of holding on to the money a bit more. So let's take a look here. Stock market's up. It's kind of it's still kind of going up, even though earnings reports are being released, and we had a lot of the banks like J.P. Morgan, Goldman Sachs, and them came in. Some of the reports, their revenues were up, but there's other aspects in there that each one has their own. Came in a little disappointing. So they're kind of shrugging that off, but they're also investors are getting a little bit leery about where things are at. So what I mean by that is they're seeing some difficulties of Trump's stuff, policies going in and doing what they're getting all excited about, what was raising the rates to begin with. The healthcare, the tax plans, the infrastructure building, all these different policies that he wanted to implement are having some difficulties getting through, and they're getting a little bit antsy about that, and are questioning if these will ever go through or not. So you may see a pause here coming up here soon as investors kind of start looking at those things, especially with the Fed was raising rates. They might see a pause, and the banks were going up quite a bit because in a raising rate environment, banks usually make more money. But if the Fed looks like they're going to be holding off on raising rates, this could also they could be reevaluating what the financial industry will be portraying. So they may not be valuing them as high if the Fed pauses on these rate hikes, and that could be a good scenario with the inflation so low and some of these economic data is coming in as low as well. So let's take a look here at the bond market, see what we're doing over here. This morning we took off quite a bit. We started the morning way up here, about 28 basis points, and since then we pulled back. So as you see this little box in here, it means there's a rate alert to lock, but what that means is that on the East Coast, because they start off so much higher than here on the West Coast, and it pulled back about the time when the West Coast will give out rates. So the West Coast won't really be priced in at this level here. The West Coast will be priced in more here. So right now we're up about 13 basis points from where we left off from yesterday, which was right here. And we did close above the 100-day moving average, which is important for us because that helps become a floor of support for us. So we're still about 13 basis points, which gives us better pricing. But the East Coast are getting a price change for the worse because it's pulled back quite a bit since the day. Since earlier in the day here, went from 28 basis points down to 13, so they lost about 15 basis points so far this morning here. It's something that, of course, we're going to want to keep an eye on, but it's interesting to note that we did touch the 200-day moving average, which we'd like to get above that if possible. That will help give us, again, more support and get us back into the rates where we were before this bit of a slump that we saw back in in June here, like towards late June here. We had this big swoon down here. So hopefully we can get above that level, and but there's some signs that are showing that we could possibly get up there. But again, we'll have to kind of keep our eyes and ears open here going forward here. So that pretty much concludes it. We do got a little bit better pricing from yesterday. East Coast got a pricing to the worst, even though they're probably still better than yesterday's pricing. It's just that it's going to be off from what was this morning. So anyways, if you guys want to get more updates throughout the day, just come over to Twitter. You can find me at Mike Bjork on Twitter. I appreciate you guys watching here. If you guys are in need of any mortgage related questions or have a mortgage that you're looking to refinance or purchase, please feel free to reach out. Email is the best way to reach me. So you guys have a great weekend. Thanks so much for watching. Sorry for the long video today. As you can see, we had a lot of data to go over. But you guys have a great weekend. Take care. See you guys Monday. Bye-bye.